All right, my next guest is still hot on the equities markets, not just in America, but abroad as well. I want to bring in Stone Exeter Chief Market Strategist, Kathryn Rooney Vera, KRV. I mean, you're on your turf right now.
Yes, sir. Welcome to Miami.
Thank you. There's a lot of things I want to hit on. But first and foremost, the tech trade is the one everyone's talking about. Software stocks getting hammered again coming into the year. Hyperscalers spending too much money. So all around anxiety. Anywhere you see the two letters AI, these stocks are down, whether it helps AI companies or it hurts companies.
Well, the macro environment in the U.S. is good for AI, I think, going forward. The CapEx is clearly there. The economy is really doing excellently and very, very well. Inflation is between 2.5% and 3%, I think, by the end of the year. Under that circumstance, the Fed cuts 1 or 2 times this year. I think the S&P goes up in total 10% this year. And I continue to be long risk. I think it's a good place to be, especially in an environment of robust economic growth, Fed cuts as well. And risk appetite kind of.
It sounds like a Goldilocks scenario, really. Maybe, and I talked to Kim Fisher at the start of the show about this. We have a hard time, grasping that it could be this good, that all the ducks are in a row. So then I'll ask you about potential risk. One thing that you talked about when you sat down, maybe the economy gets too hot, and the Fed has to not only not cut, but maybe hike rates?
There is a chance of that. I think it's a good chance. We've had several quarters of above potential growth. Potential growth in the U.S. is 1.8 to 2.2%. Fourth Q came out pretty surprisingly bad, but that was because of a dislocation from the shutdown. That took off a full percentage point. We're going to get that roaring back in the first quarter. If inflation, as a demand pull inflation, resurrects and we get core PCE not just breaking 3, but above 3.5%, Charles, I think hikes could be on the table.
Okay.
We can't discount that as a possibility by the end of this year.
The point, and I'm glad you brought that up, because we know the White House wants to run the economy hot. We know that Warsh is interested in rate cuts, but also getting rid of quantitative easing. And so Wall Street seems to be okay with that. But can we run it hot up into that number? Like, with that as a guardrail, like not go over 3.5, but run it hot. Don't be pessimistic, because this also. The backdrop is the AI revolution, right? We have to spend this money. We want to be number one in AI.
Productivity can absorb inflation. So you can run inflation a little bit higher and have productivity, but I don't think the full AI trade is in productivity numbers yet. So that'll be over the course of the next 5 to 10 years. So that is okay. I think the Fed has clearly, over 5 years, they have missed the target over the past 5 years. So 2.5 to 3% they're good with.
Right.
Above 3, I think they get uneasy. Above 3.5%, I think they start to think about.
I love that you said that. I did last week. All I talked about was CapEx. There was a time when CapEx was good, and that was when we were industrialized. We're reindustrializing right now. And again, the productivity miracle is just beginning. So I got less than a minute to go. I know in this environment, you say you like industrials and you like financials. Financials have been looking odd of late. I don't know why they haven't lived up to the hype yet.
Yeah, I think if you do get some rate cuts and deregulation, economic growth, it's a good story. And I think it's also a hedge, because if you're expecting the yield curve to steepen, that's good for financials. And I think there is a real risk of, if the Fed cuts in a robust economy with 6% fiscal deficit, then the back end of the Treasury curve moves higher. Financials do very well in that environment.
Energy as a hedge. You say energy's had a heck of a run. Maybe we'll have peace talks with Iran. So do you chase it here, or you just use it as a hedge here?
I like it as a hedge. I like tips. I like gold. So I do think
you always liked gold.
Yeah, well, thank goodness.
Yeah, I know.
It's been an outperforming trade, but yeah, absolutely. I do think energy is a good hedge. It's defensive, and it's a great place to be.
KRV.
Thanks, Charles. Great to see you.